what a $10,000 per month person's investment portfolio actually looks like. Everyone wants to know how much money high earners have invested, but almost nobody talks about what they actually invest in, the specific breakdown, the allocation, the strategy behind it. In this video, I'm pulling back the curtain on what a realistic $10,000 a month earner's investment portfolio actually looks like. Not a hedge fund, not a Wall Street trader, a regular person who built smart money habits over time and what their portfolio actually contains today. And by the end of this video, you'll have a clear, actionable starting point, even if you're starting from zero.
Welcome back to Money and Longevity, where we connect the dots between building a strong body and building serious wealth. Today, we're going deep on investing, the engine behind true financial freedom. Let's break it down.
Section 1. The Investing Mindset. First, before we get into the specific assets, we need to talk about the mindset that makes all of this possible. Because without the right mindset, the best portfolio in the world falls apart. Investing is delayed gratification at its most powerful. You sacrifice spending today so your money grows tomorrow. Sound familiar? It's the exact same principle behind every health habit we've talked about on this channel. You skip the processed food today so your body is stronger tomorrow. You go to bed at 10 p.m. tonight so your brain performs at its peak tomorrow. You invest $500 this month instead of spending it, so in 20 years it's worth $2,000. The discipline muscle is the same, which is why people who build strong health habits consistently outinvest people who don't. The research backs this up. A study from the Journal of Financial Planning found that people with strong self-regulation and health behaviors were significantly more likely to maintain consistent investment contributions and avoid panic selling during market downturns. Your morning routine isn't just building your body, it's building the mental framework that protects your portfolio.
Section 2. The breakdown of the portfolio. Here is what a realistic $10,000 a month earner's investment portfolio looks like, broken down by allocation. Allocation 1. 50% in broad market index funds. This is the foundation. Index funds like the S&P 500 or a total world market fund give you exposure to hundreds or thousands of companies in a single investment. They're low cost, tax efficient, and historically deliver around 7 to 10% annual returns over the long term. Warren Buffett himself has said that most investors, including professionals, would be better off putting their money in a low-cost S&P 500 index fund and leaving it alone. Half of the portfolio lives here. Allocation 2. 20% in dividend stocks. We covered dividend investing in video 6. High-quality dividend stocks in sectors like consumer staples, healthcare, and utilities pay you a regular income stream, while also growing in value over time. A $10,000 a month earner typically holds 8 to 15 individual dividend stocks, diversified across sectors, yielding an average of 3 to 5% annually. Allocation 3. 15% in real estate investment trusts, or REITs. REITs let you invest in real estate, commercial properties, apartment buildings, healthcare facilities, without buying physical property. They're required by law to distribute at least 90% of their taxable income to shareholders, making them excellent income generators. You get real estate exposure without a mortgage, a landlord headache, or a large upfront cost. Allocation 4. 10% in bonds or cash equivalents. This is the stability layer. Bonds don't grow fast, but they don't crash hard either. During market downturns, this allocation cushions the portfolio and gives you dry powder to buy more equities when prices drop. Think of it as your financial immune system. Allocation 5. 5% in higher risk, higher reward assets. This could be individual growth stocks, crypto if that aligns with your risk tolerance, or early-stage investment opportunities. This is the speculative layer, small enough that if it goes to zero, the portfolio survives, large enough that if it performs, it meaningfully accelerates growth. Total: 50% index funds, 20% dividend stocks, 15% REITs, 10% bonds, 5% growth bets. That is a diversified, income-generating, long-term wealth-building portfolio. Section 3, how much they invest each month. Now let's talk about the monthly numbers, because this is where most people get stuck. A $10,000 a month earner typically follows a 50-30-20 framework with a twist. 50% essential living expenses, rent or mortgage, food, transport, utilities, roughly $5,000. 30% lifestyle spending, travel, eating out, entertainment, personal development, roughly $3,000. 20% invested, every single month, without fail, roughly $2,000. That $2,000 a month invested at a 7% average annual return builds to over $1 million in 20 years, not from a windfall, not from a lucky stock pick, from consistency. And here's the health connection one more time. The same sleep habits that protect cognitive performance also protect investment discipline. Sleep-deprived investors are statistically more likely to panic sell during downturns. Well-rested investors hold steady. Literally, your sleep schedule affects your investment returns.
Section 4. How to start from zero. Now, what if you're not at $10,000 a month yet? What if you're starting from scratch? The answer is simpler than the industry wants you to believe. Step 1. Open a brokerage account. Platforms like Fidelity, Schwab, or Vanguard in the U.S., or equivalent platforms in your country, are free to open, have no minimum balance, and charge zero commission on most trades. Step 2. Start with one index fund, a total market or S&P 500 index fund. Buy as little as $50 worth. That's it. You're an investor. Step 3. Automate it. Set up an automatic monthly contribution, even $50, even $100. The amount matters less than the habit. You're training the investment muscle the same way you train the gym muscle. Start light, build consistency, increase over time. Step 4. Don't touch it. The single biggest mistake new investors make is selling when the market drops. Every major market crash in history has been followed by a recovery and new all-time highs. Time in the market beats timing the market. Every single time. Step 5. Increase your contribution every time your income increases. Every raise, every new income stream, every month your side income grows, a portion goes straight to investments before you have a chance to lifestyle inflate. That's the whole system. It's not complicated. It just requires the same consistency and patience that every habit on this channel requires.
Section 5. The Health Portfolio. Before we close, I want to introduce one final concept, the health portfolio. Because everything we've covered on this channel, the sleep, the exercise, the nutrition, the stress management, these aren't just lifestyle choices. They are investments with real, measurable returns. Every morning workout is an investment in cognitive performance that pays dividends all day. Every high-protein meal is an investment in sustained energy that compounds over decades. Every 8-hour sleep is an investment in decision-making quality that protects your financial portfolio. The people earning $10,000 a month and building real wealth aren't just managing a financial portfolio. They're managing two portfolios simultaneously, and they know that the returns on one directly fund the returns on the other. That is the money and longevity thesis, and it's the most important financial concept nobody is teaching. Outro and CTA. Let's recap the $10,000 month investment portfolio. 50% broad market index funds, the unshakable foundation. 20% dividend stocks, the income layer. 15% REITs, real estate without the headache. 10% bonds, the stability cushion. 5% growth bets, calculated risk. Invest 20% of your income every month. Automate it. Don't touch it. Increase it as you grow. And build your health portfolio with the same discipline, because the two are not separate goals. They never were. If this series has given you value, subscribe.
We're just getting started. Every week we go deeper on the overlap between your health and your wealth and give you the exact tools to build both. Drop a comment below telling me the first investment you're going to make. I read every single one. Thank you for watching Money and Longevity. I'll see you next week.